Broker's chief strategist, Steve Sosnick. Steve, mighty unusual to see such a pronounced move in a company with a valuation that is so huge, and that would be Oracle, and it is lifting so many parts of the tech world. How do you read it?
I got to admit, when I saw the number last night, I was wondering if it was a misprint or something, because it was so outrageous. And the reaction, understandably, is fair for a company if they're going to take their cloud division from $10.3 billion to $144 billion in 5 years. That, of course, you need to re-rate the company. In terms of market cap, it was about the 20th largest company before. Now it's about the 10th. So it passed things like Exxon and Lilly and J.P. Morgan today. It just shot up the charts. So, but again, if you're going to put that much revenue into a company, sure, it makes sense.
Well, can we just point out that Oracle posted a slight miss on both EPS and revenue? It's just that its backlog is so gigantic. Then, of course, you've got this OpenAI breaking news, a $300 billion deal. And that, of course, lifts that entire sector and anything related. We're calling it the halo effect. But I do have to ask at this point, just because this is how we operate, we got to protect our viewer investors. And the question is, does Oracle's unbelievably aggressive numbers, does that signify possibly that we're getting close to peak AI?
It's funny because my answer has changed between this morning and this afternoon.
Really?
When I learned that it's one customer. This morning, it seemed as though they were getting this business from a whole bunch of different customers, basically all the other usual suspects. Now it's one specific customer, and that's, I think, why you saw the NASDAQ and some of the others pull back a little bit, not terribly so, but it changes the narrative. After NVIDIA earnings, we were starting to wonder, are companies pivoting toward wondering whether AI is going to be profitable for end users, and might they pull back some of their spending? Then this morning, it seemed as though, no, everybody's spending great guns. Forget that idea. Now that it's just mostly OpenAI doing the spending, it changes it back to a more company-specific type of piece of news.
Okay, let's broaden the discussion here. And when you broaden it, it does go to energy because you need the power companies to power all of this, but not the Exxon Mobils and the Chevrons of the world. It's more the Bloom Energies, the Vertivs. You're talking about AI and the data centers and the ones that power all of this, not to mention CEG. Big moves in these names.
Remember when utilities used to just be the boring sector that paid your dividends and you could just go to sleep on? Well, now you can't because it's powering this whole revolution. Obviously, you've got a lot of smaller names getting a lot of the press because there's leverage there, whereas in a big utility, obviously they provide a lot of the power, but it's harder to move the needle. They're heavily regulated, but it's become an exciting sector. And it's not just this sleepy, interest rate dependent, place to put your money. It's gotten quite a bit more exciting.
Well, you know what is not exciting, but it is exciting when you look at it in the prism of the economy, through the prism of the economy and the Fed. What's the producer price index number for August? Now, this is the wholesale inflation number. Came in extraordinarily benign, a lot lower than the expectations. And July's numbers were also revised. It was pretty impressive, falling 0.1% month over month. The expectation was to see August wholesale inflation moving higher by 0.3%. You can see also year over year, it was much cooler than expected. Tomorrow we get CPI, the consumer price index inflation number. What are you expecting there?
Well, I'm going to just stick with sort of the 0.3 that was expected, and that for month over month on core, which is really the one that I tend to watch. But obviously, this does change the narrative a bit. PPI, though, is known to be a bit more volatile. Remember, last month it was 0.9 before it was revised down to 0.6, so it does have a bit more fluctuation. The core PCE was 0.3 as well, and that's really the Fed's preferred measure. I think they use the core PCE as their baseline, then sort of shade it with the CPI. Under the surface, if you take it out to 2 digits, core PCE and CPI, and actually it was PPI as well, we're all going up slightly. So let's see if that changes.
Okay, really quick. Do you short a market like this?
Right now, this is a treacherous market to short. My advice, if you're nervous, is don't fight the tape, but insure against it. Volatility is very cheap. You can take some chips off the table using hedges, using puts, or maybe going a bit more defensive stuff. But it's a difficult tape to fight right now, as you see from Oracle.
Oh, exactly. I mean, you continue to see such big moves to the upside when it comes to records. Again, the S&P is currently at a record, folks. We're continuing to watch it. NASDAQ it has lost its gains. It is now about down 32 points. Steve, good to see you. Thank you very much.